Hi, everybody. Welcome. We are starting early today and we're going to finish early. Happy Friday to everybody. Um, Happy New Year to those of you who weren't here early yesterday. Let's start with Tesla stock, or let's do markets overview first. Today, Dow Jones is up 0.6% as of 12:35 p.m. Eastern. Nasdaq up 1.3%. S&P 500 up 1%. The market is led by Tesla, the bounce in Tesla stock and chip stocks. Apple is slightly down, Microsoft is slightly up, not much activity there. So the market is once again being led by Nvidia. In the last 5-day period, Nvidia is up 3%, and that is the only Mag 7 company that's up. Um, as opposed to Tesla down 13%, Apple down 6%, Microsoft down 4, Broadcom down 5, and other chip stocks are also down. So that's really interesting. That this is an Nvidia story in the last week or two. After underperforming the markets, Nvidia has bounced and is coming up to near all-time highs. I think its near all-time high is, let's see, it's a $3.5 trillion company. All-time high is at $153 per share, and right now it's at $144 per share, up 4% today, pushing the markets higher. Let's see if Amy wants to come up and chat a little bit. Please let me know on YouTube or X if you're having any audio issues so that I can address them right away. Um, yeah, really interesting activity in Nvidia stock. In the last 5 days, in the last 2 days, really, Nvidia is up 7%. In the last month, from the bottom, it's up 12%. So it really accelerated in the last 2 days. Um, Back to prices seen in early December. And there's some speculation right now that Nvidia is kind of front running CES announcements. So Jensen is supposed to give a speech in CES 2025 in the next couple of days here. And let me see when that is. January 7th through Friday, January 10th. So next week, a week from today, is when CES concludes. Let me see if I can find out what Jensen's speeches. Any questions, comments? Please request to speak. When is Jensen scheduled to speak? Yes, opening keynote on Monday, January 6th. So on Monday, Jensen is going to deliver the opening keynote. Interesting. And NVIDIA is also supposed to, I think the earnings release date for NVIDIA is February 25th, I think. Let's see. February 19th on Wednesday after the market close. So very exciting times for the next few weeks. NVIDIA earnings usually come at the end of the quarter. And so, it kind of sustains the excitement throughout the earnings season. Tesla stock has recovered to $395 per share. The low of the day today was $380. And in the last 5 days, Tesla stock is down 12%. The all-time high was $488 per share. Carvana is down quite a bit. Give me 1 second. Okay. Carvana is down 5% today. Lots of activity in the last 24 hours on Carvana after the Hindenburg research report was published. We've been talking about Carvana's short idea here for several weeks. The first time I shorted the company was above $250 per share. And yesterday, last night especially, it went viral. and millions of people, millions of views on this post about the Hindenburg research, which we discussed. Um, oh, interesting. We discussed Carvana's Hindenburg research report on Carvana yesterday in this space quite a bit. And when ACDC comes up again, we can continue to discuss that stock. Very detailed report. I mean, I'm really actually pretty impressed by the Hindenburg research report. Very comprehensive and detailed documentation of their interviews, all the way back to the SEC filings, and I thought it was a very good, well-written report. Lots of speculation to my liking. I mean, some of the things they say about accounting, fraud and everything. I think it's more speculation than anything else. Doesn't mean there isn't any, but I wouldn't hang my hat on that. And their primary, like the starting point of their short position, I think was more valuation, which is what I'm kind of thinking about too. Um, and it's amazing. So Nvidia is up 4% today, and Tesla is up 4% today. If you look at the weighting of these companies in the S&P 500, Nvidia has a 7% weighting, Tesla has a 2% weighting. So together they have about 9-10%. And if they're up 4%, more than 4%, we're looking at a 40 basis point contribution to the S&P 500, which is up 1%. The rest of it is coming from healthcare, industrials, utilities. Pretty much everything is up except for Apple, Adobe, and financials are flat today. Financials obviously had a huge outperformance in the last year because of the in the last few months because of the expected deregulation by the Trump administration. We'll see about that. Rivian is up nine. Actually, let's see. This is a fast changing stock today after they announced their quarterly production and deliveries numbers. Rivian is up 19% at $15.80. The high of the day was $16.52. And when it opened at $13.71. So very volatile day. Lots of short interest in the stock. So of course it's going to be volatile. And the last local high was $18.50, I think, in July, and then before that was 23. So it's still in line with the downward trend, downward spiral of Rivian. I'm very much focused on the fundamentals of the company. We had a earnings call watch party um, last quarter. We're going to do it again this quarter. And what I heard in that last quarter is that the management is very much focused on achieving gross margin profitability in Q4. The deliveries being higher than production helps that a little bit, not too much. It helps free cash flow a bit more. And but this obviously is coming at the cost of price cuts, absurd lease, very unsustainable lease prices, and I'll pin at the top of our screens the 2023 Rivian R1S Adventure Edition Quad Motor, which sold for $65,000 on bringatrailer.com. So this is a vehicle that was priced initially at more than $100,000. If depending on the options, it could be as high as $115,000. So I approximate a 40% drop depreciation in 1 year for the 2023 Rivian R1S Adventure Edition Quad Motor. This result of the auction is at the top of our screens, and um, this this so I mean, obviously 40% depreciation 1 year is not very sustainable, and this is even before the new one ramps up production. So that's going to happen maybe in Q1. Um, but to me, this indicates a continuation demand problem that Rivian is having. So we'll see how they pan out. I mean, maybe they'll do gross margin positive this quarter. I don't think it means much because what really matters is net income profitability for a company, especially when the interest rates are so high and set to remain high. and this short squeeze may continue. But I did increase my Rivian short position today, above $16 per share, and the stock is already pulling back a little bit. But yeah, I mean, I guess we'll see. We'll see how this one pans out. If it continues to increase, I'll probably increase my short position some more, and maybe do it a different way. So we'll see. Man, Nvidia at about, I think, just broke over $144 per share. $144 per share, 22 cents. High of the day for Nvidia. $3.5 trillion company, 57 PE ratio. No dividend yield and some buybacks. Interesting. Any questions, comments, please request to speak. Let's see if Henry has anything to say on Nvidia or other chip companies. If someone put a gun to my face and said buy one of the chip companies, I would probably buy Micron, just because it's pulled back so much, and they have such a dominant position in the market. So um, also interesting how Broadcom, popped 40% and just stopped. Um, Looks like it's consolidating around between 200 and $250 per share. So maybe it will continue to rise. We'll see. Broadcom is positioned as more of a um, custom chip designer and supplier. So the market is starting to see Broadcom as more kind of relevant in the future, as opposed to these, generic GPUs that Nvidia is working on. But both of the companies are doing well in the last 2 weeks or so, taking turns going up a little bit. But we'll see. Let's see. Microsoft, Nvidia's biggest customer, is flat today, down 3% in the last 5 days, down 2% in the last month, down 9% in the last 6 months, and in the last year, almost flat, despite their massive stock buybacks at 35 PE, $3.1 trillion company. Apple has pulled back a little bit in the last few days here, $3.7 trillion company, but down 6% in the last 5 days. I wouldn't be surprised if Berkshire Hathaway has sold more of their Apple stock in Q4, which we're going to find out in mid-February. All right. Um, I'm going to continue to read this Carvana research report if nobody has any questions or comments on Tesla. If you have any questions, comments, just request to speak. Otherwise, sit back and enjoy this Carvana. I added to my Carvana shorts today as well. I think this is a really good short opportunity. The stock is down 6% today at $188 per share. It tried to bounce back and test that $200, between $195 to $200 kind of neckline if you're looking at a head and shoulders pattern at the top. Um, but it got rejected. So, I mean, from what I can tell, anybody on the short side is piling on this company. So maybe the boat is getting too full. Who knows? But if you look at the short interest in Carvana, 6% of the outstanding shares as of January 2nd. So that's very recent data. So what is the source of this data? January 2nd, 2025, Carvana has a short interest of 12 million shares, which is 6% of the outstanding shares. The short interest ratio days to cover is 4.5, which means it could take 4.5. I mean, that depends on the volume, obviously. Um, on December 13, short percentage of float was 11%. Yeah, that's interesting. So it went down, I guess. Nah, that doesn't make sense. Let's look at actually, let's go Yahoo Finance. Shorts Shares outstanding floats. Shares short 12.44. Shares short of float is 11%. Okay, so it's pretty high. I mean, 11% is really high. Rivian also has one. So Rivian is going through a short squeeze today. Rivian has shorted 19% of the float short. So this is very much back in the times of Tesla stock. Um, we'll see if Rivian shows gross margin positive. I think they probably will, given their ZIP credit sales and everything. But for valuation, what matters is operating profitability, obviously. Let's continue with Carvana. In Q3, Carvana reported $3,500 in retail gross profit per unit. Carvana inflates this metric by 34.5% by dumping an estimated $390 million of selling costs into SG&A annually, in stark contrast to accounting practices of competitors. One of Carvana's most important metrics is retail gross profits per unit, which is defined as the gross profit from vehicle sales minus the costs associated with those sales. Given that nearly 70% of Carvana's business comes from selling cars directly to the public, retail GPU is a metric investors use to try to understand how profitable Carvana's vehicle sales are. In Q3, Carvana reported retail GPU of $3,500. However, this metric doesn't include three of the most basic costs associated with a selling vehicle, which Carvana instead lumps into SG&A. Limited warranty. Carvana discloses that the costs related to its limited warranty are expensed to other SG&A, despite its belief that industry peers generally include these expenses in cost of sales. Interesting. In Q3, Carvana expensed $31 million in warranty claims, or $285 per share per vehicle, based on Q3 sales of 108,000 retail units. Additionally, in Q3, Carvana paid Drive Time $5 million to administer the warranties. Interesting. $46 per vehicle based on Q3 sales. Outbound logistics. Carvana also lumps the cost of outbound logistics or vehicle delivery to other SG&A. That's interesting. Despite its belief that industry peers may include these expenses in cost of sales. In Q3, Carvana expensed $29 million in logistics expense to other SG&A, or $267 per vehicle. Title and registration. Finally, Carvana doesn't include transaction expenses in cost of sales, such as title and registration fees, unlike competitors AutoNation and CarMax. In May 2022 presentation, Carvana stated that its midterm goal was $300 in transaction expenses. Assuming Carvana achieved this target, we estimate the expense $32.6 million in transaction expenses to other SG&A, or $300 per vehicle. Taken together, we estimate that Carvana has shifted approximately $900 per retail gross profit per unit, by 34.5%. Interesting. Yeah, I mean, I don't see why any of these three items should be expensed into SG&A as opposed to cost of goods sold. But there's a lot of leniency around where expenses are classified. So that's interesting to know. I mean, I am learning quite a bit about Carvana from this research report. So I highly recommend people read it if they care to short the stock. The stock is now down 6%. Let's continue. With the stock price depressed from poor loan sales on July 17, the Garcias signed an agreement to purchase $126 million in Carvana stock. 2 days later, Carvana announced the best quarter in company history, featuring a massive earnings beat. We talked about this yesterday. Let me see if there's any other details. Gain on loans. An estimated gain of over $427 million for the Garcias because of that insider trade. In Q3, Carvana reported, we talked about that. In August 2023, Carvana told investors its cost reduction measures had not come at the expense of the quality of cars itself. But the former Carvana reconditioning leader told us the company adopted a two-tier policy and lowered the quality standards for economy line cars. They did make an adjustment to the standards, but only for that segment. They call it their economy line. I don't think they talk about that. They don't advertise it that way. When a company engages in a major cost-cutting exercise to stave off bankruptcy concerns, the natural question would be whether this can be done without sacrificing product quality. Given that repairing cars, as opposed to manufacturing them, is broadly a function of the cost of parts and labor, at some point, there's an obvious trade off between quality and cost. At the JP Morgan Auto Conference on August 9, 2023, Carvana CFO assured investors that it succeeded at implementing major sustainable cost reduction measures without sacrificing quality, the used car market equivalent of discovering a unicorn. Carvana further tells investors that it applies a universal standards in its investor presentation. However, we spoke to a former leader responsible for overseeing reconditioning at Carvana during the restructuring. They told us quite clearly that Carvana adjusted standards. Quote, Carvana did make an adjustment to the standards, but only for that segment. They called it their economy line. I don't think they talk about that. They don't advertise it that way. We asked for specific examples. Quote, brake pads. They would replace them at a certain point and then lowered it to basically what the industry standard is. They made a lot of adjustments to cosmetic standards. They allowed them to first get the cars through quicker, do less work, and put less money into those units. The economy line, for instance, you may be allowed more dents on the low visibility below the wheel arch as opposed to the regular standard. Another former director confirmed the differing reconditioning standards for certain vehicles, noting it was part of many unwritten rules at Carvana. If you look at any document or any SOP, standard operating procedure, written on Carvana's internal website, there's never any note of an economy line or anything else. You would never notice that that these cars get a different treatment. There were a lot of unwritten policies at Carvana. Part of the reason for this is because Carvana has begun to pursue lower quality cars, as one former reconditioning had explained. Quote, when I first got there, the vehicles that were coming in were immaculate. But once COVID hit, like I said, COVID came around, the cars we started getting were looking like they were out of a war zone. They were really, really bad. Carvana would accept anything, reconditioning site manager said. Not only is Carvana reconditioned less over time, Carvana's process to buy from customers called Sell to Carvana has limited checks to prevent it getting sold lemons. It appears that instead of being transparent of the trade-off between cost and quality in reconditioned cars, Carvana chose a deliberate strategy to reduce quality and hide it, per the former leader. Accounting red flag. Carvana has used mid-tier auditor Grant Thornton for 10 years since its pre-IPO days. Grant Thornton also has had a relation with the related party Drive Time. We are not doing what the market thinks. We are not looking for fraud. We are not set up to look for fraud, the former Grant Thornton CEO said. I mean, this is in line with industry practice, so there's nothing unusual there. Overseeing all this is Carvana's mid-tier auditor Grant Thornton, which has had 10 plus year relation with the company from, from even before going public. At a $44 billion market cap, one might reasonably expect Carvana to consider rotating to a larger Big Four auditor. Carvana is now the third largest US listed client by market cap for Grant Thornton. Interesting. Interesting. Grant Thornton also appears to have a relation with Drive Time, the private related party owned by the father of Carvana's CEO. Previous registration documents with this SEC show Grant Thornton audited Drive Time as far as back as 2010. Interesting. I think they have to rotate all the teams, but that's an interesting statistic. The stock is now at $187 per share. Let's continue. In 2024, Grant Thornton's website featured a glowing tribute to Drive Time under its audit services section per Internet Archives. This section was removed from the site in the past several months. Interesting. Um, the page used to say, Drive Time hates the status quo, and that is the sort of mentality we seek in our clients. Really? Companies that are constantly evolving, perpetually seeking new ways to better serve customers and grow people, that sort of innovation has been critical to Drive Time's success, according to David Gifford, partner at Grant Thornton. Hmm. Source Wayback Machine. For those that haven't discovered the hard way over the last few decades that auditors don't always protect investors from fraud, the former CEO at Grant Thornton UK, David Dunkley, clearly disclaimed this in a 2019 British parliamentary inquiry. We're not doing what the market thinks. We're not looking for fraud. We are not looking for it the future. We're not giving a statement that the accounts are correct. We are not set up to look for fraud. Yeah, I mean, that's normal. Carvana is subject to an undisclosed SEC investigation per Disclosure Insight, a Freedom of Information Act intelligence firm. We know the company stayed silent on two recent investigations, one of which is ongoing, Disclosure Insight in August 2024. In March 2020, the company disclosed that it had received a voluntary request from the SEC regarding related party disclosures and accounting policies and procedures for historical loan sales and refinancings. Over 4.5 years later, Carvana has remained silent on interaction with investigative agencies. Analysts haven't questioned management about this on investor calls. Disclosure Insight, an FOIA intelligence firm, notes that it has learned that there are two undisclosed SEC investigations here, one of which remains ongoing in an August 29, 2024 report. Disclosure Insight update August 29 says, an early signal of SEC investigative activity was later found by us in October 2020, with ongoing enforcement proceedings at Carvana confirmed as ongoing three times since, most recently in May 2024. In that same May 2024 response, we also learned there are two undisclosed SEC investigations here, one of which recently ended. In a letter dated June 13, 2024, we were then told the closed matter generated approximately 9 boxes of records, making among the average size closed investigations we encountered. DEI's take, Disclosure Insight. We first warned on Carvana in September 2021 when this was still a $330 stock. Our warning, run fast, run far. We said you cannot trust these people. We still think that, especially now that we know the company stayed silent on two recent SEC investigations, one of which remains ongoing. Reminder, we also issued 3 warnings among the online car companies. Hindenburg says, we think the company should clarify an investigation faces with regulatory agencies. Conclusion. We think the Garcias will leave shareholders with nothing. Many business leaders look for win-win situations where shareholders, partners, and everyone that creates value can then derive value from these contributions. Others treat business more parasitically, viewing every kind of party as an opportunity to extract as much as possible, leaving others with nothing. At any point in Carvana's first incredible run, the Garcias could have de-risked the balance sheet by raising significant capital at its then lofty valuations. Instead, facing an impending collapse, they hyped their prospects and raised modest capital while Garcia II sold $3.6 billion in stock. As the numbers tanked, they seemingly pulled accounting levers to make them even worse. This enabled Carvana to extract a renegotiated debt package that wiped out principal and pushed off cash interest, essentially stiffing lenders, before pulling levers to kick off the next big rally. With the numbers rocketing higher in the second incredible run, the company again could have de-risked the balance sheet by raising significant capital at lofty valuations. They could have made it sustainable, but instead, the priority again seemed to be raising only modest capital while enabling Ernie Garcia II to sell another $1.4 billion in stock. In the end, the Garcias will bank billions. For customers, they face the prospect of inferior or potentially dangerous cars due to cost-cutting measures favoring the bottom line over quality and safety. For shareholders and debt holders, we expect they are in for rough times ahead. We want to thank literally dozens of people who reached out to us imploring us to look into Carvana, from the used car dealers and industry experts across the country to average investors that sniffed out that something or many things weren't quite right. Disclosure, they are short Carvana, and then there's a legal disclaimer. Let me see if I went over something here. I'm gonna read through this part four. I think we skipped that part. A litany of additional accounting tricks and issues. Um, Let me see. Yeah, really interesting stuff. Carvana is testing the lows of the day at $186 per share. I think the company's worth zero. I think the Hindenburg research report is spot on, but we'll see how that trades. Tesla FSD tracker. Let's take a look at that real quick. Um, Tesla FSD tracker shows 96.7% drives with no critical disengagement. Now more than 6,000 miles entered from 366 entries. Miles to critical disengagement is 244 miles. I told Elias that I think we need, for this to be statistically significant or get close to it at least. I mean, without the distribution, I can't really know. But just by my estimate, I think the tracker needs tens of thousands of miles from thousands of entries and hundreds of testers around the country. Like that would be, high confidence, kind of 99 percentile confidence level for me. I think the way it is right now with thousands of miles is more around 95% confidence level. That the true um, distance to critical disengagement falls within that range. But I continue to just look at this on major release basis, V13 versus V12. I see a lot of people posting outside about minor releases like V13.1 versus V13.2, but I don't think the tracker has enough data for that kind of nuanced analysis. And also, I don't really look at I think the driving conditions or state by state performance. Anecdotal data is probably more important for that. I don't think the tracker has enough data for those kind of detailed analysis. Maybe in the future, who knows? But Elias responded and says, if you've noticed, the miles to critical and miles to any disengagement have not changed much over the last few thousand miles. So I don't think we need tens of thousands of miles from hundreds of testers for all of the metrics. I have been thinking about how to add or adjust things on the visualizations, not just error bars, to show if there's enough sample size. The tracker needs something dynamic that will appear like a color asterisk or something. Um, so he's trying. I mean, Elias, I mean, the tracker has come a long way in the last 2 years since we first started talking about it. Um, and he's going to continue to improve it, obviously. And I think more and more people will continue to enter their data um, as the number of Teslas on the road and the take FSD take rate increases. ACDC, how are you?
Good, Iman. How are you doing?
I'm good. What do you think of the price action today?
Well, the ISM numbers came out a little weaker, and I think the market's just reacting to that. Maybe some hopes on rate cuts again. So, I mean, I really don't see any organic strength in the market. I think it's the reliance on easy money and liquidity, and that's what's leading it up.
Yeah. What do you think about Rivian results?
You know what? I don't really follow Rivian much. I just saw some passing headlines on it, just mostly just people talking about the delivery numbers and stuff. And I did see a note on Rivian saying basically that they've narrowed down their supply shortage, and thus they shouldn't have a restriction in production. But I don't know. I mean, I don't hang my hat on that. That was my number one decision of not even considering Rivian. I think they make great cars, but if the company's not going to be around or in that manner to be able to support this car, it's do you want to buy the stock? Do you want to buy the car? I don't think so.
Yeah. Um, Interesting. Interesting.
I have a question for you on, I mean, you always talk about, critical disengagement, right? Do you think, let's just say, I mean, we're not really getting a lot of critical disengagements. But in my opinion, I mean, I've been using FSD 13.2.2, and I'm seeing most of my problems in at the destination. Okay, it stopped pulling out of my garage for me. It never pulls into a parking spot. It never pulls into another person's driveway when I'm going to a location or so. So it has a lot of problems around there. So those are not critical disengagements. But in your opinion, do you think they can still go ahead and launch, even on a limited basis, with these mistakes happening?
Well, I don't think like Waymo doesn't really pull up to a garage or something, or doesn't go into your, um, through your gated garage or whatever, right? So, I mean, I think it's possible. Like they can do FSD unsupervised in, a couple of cities, like they said they will. I don't think that's going to happen this year, but it's probably maybe next year they can do something like that. But I just don't think it's going to be material to the company.
Yeah, it's definitely not going to be material until they've got. I mean, my math doesn't even add much to the bottom line, hardly anything at 100,000 and 100,000 robo taxis. That's a lot of robo taxis, and we're not talking about just two markets anymore.
Yeah. You think? Yeah, I don't think the existing fleet will be able to do it. But yeah, I mean, we went over this a bunch of times. Do you have a Tesla position?
I don't know. I've been in and out since January of 23 three times. I mean, my first time I bought it or even looked at it really was when it dropped down to like 100, 110. That's when I entered it. And since then, I've been in and out three times. But it's just a stock at the valuations or the premiums that it trades that I can't hold long term.
Yeah. It's up 5%, almost at $400 per share. Down from 488 to 379. Or I guess yesterday the low was 376. So it's recovered um about 15% of that. Interesting. Man, Nvidia is a stunner. Like it's just the company that will not go down, you know? Amazing. It's
What do
up
you think is the
from
headline on that? What do you think is lifting it up today?
it's up 12 times from October 2022. Just really incredible. I mean, some people say it's that Jensen is going to give a speech at the SEC. I mean, CES 2025 on Monday. That's going to be opening speech, and maybe he'll give some details around the Blackwell and their new upcoming GPUs after that, Rubin. So I guess that's the excitement. I'm not really sure, but NVIDIA's upcoming GPU architecture, codenamed Rubin, is poised to succeed the current Blackwell architecture with significant enhancements and anticipated performance, efficiency, and scalability. Manufacturing process and design. Rubin is expected to utilize TSMC's advanced 3 nanometer process technology, a progression from Blackwell's 4 nanometer process. This transition is projected to enhance transistor density and energy efficiency, contributing to improved overall performance. Rubin architecture anticipates a future of 4 times reticle design, an advancement over Blackwell's 3.3x design. This modification suggests a substantial increase in the number of transistors and computational resources, potentially leading to higher performance capabilities. Memory and bandwidth. Like these are important for Tesla as well, right? So memory and bandwidth, memory technology. Rubin GPUs are expected to incorporate high bandwidth memory 4, succeeding 3E memory utilizing Blackwell GPUs. This upgrade is likely to result in increased memory bandwidth and capacity, facilitating more efficient handling of data-intensive tasks. Memory stacks. The architecture is projected to support eight with memory 4 stacks with future iterations such as Rubin Ultra, potentially accommodating 12 stacks. This enhancement would further augment memory bandwidth and performance. Okay. Computational power. While specific performance metrics of Rubin GPUs have not been fully disclosed, the advancing process technology, chip design, and memory architecture suggest a significant performance uplift, energy efficiency. So, kind of more progress. Slated to enter mass production late 2025, with availability in data centers and other applications expected early 2026. Subsequent iterations such as Rubin Ultra are projected to release in 2027. So I guess excitement around that. I'm not sure. What do you think?
I couldn't really find a valid reason. There was some headlines around it about Nvidia making $1 billion investments in the AI startups. I mean, that to me is kind of like a double play. I mean, they're investing in their own clients who are buying their chips, and so far these companies, have been rewarded by the market, and especially some of them that are privately held have future potential.
Yeah. Yeah, they do have an interesting play. They're like, yeah, if we can't, so we'll take an equity stake in your company and then sell your products. Very interesting strategy.
Yeah, I mean that's a little bit of an encouragement to continue to buy their chips.
Of
um,
course. Yeah.
so it's like I said, it's kind of like a double-edged sword. I mean, but that I mean, it is a smart play from their side for sure. Especially, I think XAI is. I'm sorry, XAI, but then also OpenAI, I think, is one, right?
Yeah. Yeah, exactly. I don't know if they had an equity stake in OpenAI, do they?
I'm gonna have to look that up. Let me see.
I
But I
got it.
mean, some of these pre IPO companies, that could be a significant investment.
I mean, what do you think is the intrinsic value for OpenAI?
I don't know that. Sorry.
As of now, I would honestly, my just initial take on OpenAI is that it's not worth much, but we'll see. As of now, Nvidia does not have an equity stake in OpenAI. OpenAI has primarily received funding from entities like Microsoft, which has invested billions in the company, including cloud infrastructure support for its AI models. Nvidia, on the other hand, plays a crucial role in OpenAI's ecosystem as a key supplier of GPUs used for AI training and inference. OpenAI relies heavily on Nvidia's hardware, such as H100 GPUs, to power its AI models, but this relationship is strictly transactional rather than equity based. Yeah. Let's see. What companies does Nvidia have an equity stake? In which companies does Nvidia have an equity stake? And let's ask O1. It's so
So
funny. I'm saying OpenAI. I don't think OpenAI is worth much as I type my question to ChatGPT.
yeah. So it says other companies NVIDIA has invested in include OpenAI, Cohere, Mistral, Perplexity, and CoreWeave.
Right. Yeah. Man, I've seen so many examples of ChatGPT 4.0 performance versus O1 performance. I mean, it's day and night sometimes, like it's like just what I'm getting from 4.0 is trash. It is completely worthless, burn the garbage. And O1 nails it. So can't wait for O3. Anyway, in which companies does AMD have equity stakes? One, strategic minority investments, CoreWeave, cloud GPU provider. What they do is CoreWeave specializes in providing cloud GPU compute resources, often using Nvidia hardware, power AI, CGI rendering, and VFX workloads. In April 2023, CoreWeave announced a $221 million Series B round led by Magnetar Capital, and with strategic participation from Nvidia, whatever that means. So that sounds small. Um, also invests in startups through its GPU ventures arm and supports early stage companies via the Nvidia Inception Accelerator program. Yeah, I don't see this. This is more of a strategic play as opposed to trying to make money from these investments. Major acquisitions, wholly owned, Mellanox, high performance networking products critical for data centers and AI clusters, Swift Stack, cloud native software defined storage solutions for high performance computing, ARM. NVIDIA tried to acquire ARM from SoftBank, but the deal fell through in early 2022 due to its regulatory hurdles. It doesn't hold an equity in ARM today. And Bright Computing, software to manage large scale clusters using high performance computing, AI, and hybrid cloud environments. Strategic alignment, ecosystem building, hardware software synergies. Yeah. I don't think Nvidia is a there's companies out there like they'll just keep acquiring competitors, like roll up strategy. That's not what they're doing here.
Yeah, and even on a technical basis, I mean, this is a good breakout for Nvidia, but it's tried this, for a last few months. It just seems like it gets tapped out right around this level and backs back down. So it'll be interesting to see where it goes from here.
Yeah, I'm really, really interested in this company, and I have a pretty large short position on Nvidia at this point. I've been adding to it. I added to my Carvana short position this morning as well, and last night and yesterday morning. So Carvana is becoming a bit of a short, pretty big position too. And Rivian I added today as well. And Tesla, I'm not adding at this point because it just pulled back so much. But we'll see if it goes back to 500 kind of level, then I would add at that point, I guess. But what else? I have Axon, AXON. The more I look into it, the more I'm like, I think that's the next Carvana story. But I'm not claiming any sort of accounting issues in either of the company. That's what Hindenburg says, but I think they're just overvalued. And made some money shorting Toll Brothers, um, MicroStrategy. My positions on those are pretty small at this point. Man, MicroStrategy is up 10% today. Look at that. Yeah, that's crazy. Maybe I'll short it again if it continues like this.
I'm not sure if you mentioned this, but did you see the response from Carvana to Hindenburg's
No, I
report?
didn't. Let's see.
It seems like a pretty generic response. They did not
Right,
really lay out any. I mean, Hindenburg's report is very factual, at least in how they've laid out and with
right.
supporting, information. And I think Carvana just came out with a generic line, that this is motivated and not true, and
Right.
without really clearing out any of the actual.
Reached by payments, a Carvana spokesperson said in an email statement that Hindenburg Group was intentionally misleading and inaccurate. In the 7 years since our IPO, Carvana has been one of the most heavily researched public companies. This statement said, the arguments in today's report are intentionally misleading. I don't know what the fuck that means. What does that mean? Most heavily researched public companies. That means nothing, according to these accounting allegations. Absolutely nothing. Like an auditor can't catch fraud. You think a fucking Wall Street analyst is going to? Give me a break. The arguments in today's report are intentionally misleading and inaccurate and have already been made numerous times by other short sellers seeking to benefit from a decline in our stock price. We plan to stay focused on executing our plan for another great year in 2025. Yeah, that's interesting.
I mean, Hindenburg's report answered all of the questions that we were asking ourselves as to why it's doing so well. And, as a model, we could see that, okay, it's an efficient model. I think I related to you that I used it. I referred it to my friend. He used it to sell his Corvette, which was kind of like broken down and didn't even like recognize that. And they just packaged it up and just sold it. So I think this report, spot on, just
Spot on.
highlights all
Yeah.
the facts that how they were managing
Yeah.
these numbers.
Yeah. I mean, this is such a high profile research report at this point. I mean, I was looking at some of the views that some of these tweets got last night. We're talking millions of views. And every short seller is talking about the company now. And if they get this right, they're going to build some sort of clout in the short seller. I mean, even more so than what they have today already. Amazing.
And I still cannot believe that the stock is not down more. I think, like I
Yeah, I
said
was expecting like a
yesterday,
20, 30. I was expecting a 30% drop. But when you think about it, when they published the research, the stock went up 15% at first and then drifted down, which is also weird. So you can't really put a lot of weight into these like day-to-day movements. I think the stock is headed down 99% again.
I agree. And once those fund managers start liquidating, who are the major holders, you're going to see some major drops in those.
And how do you know they how do you know they haven't started?
I'm sorry, you were breaking up, but I don't think that's the volume that we're showing. I mean, who else would be buying this to support it? This is just retail volume kind of trading around. I don't think we've seen big blocks come in there. I mean, on the volume basis, it hasn't seen huge spikes.
No, yesterday's volume was pretty high. I mean, today the volume is 6.3 million average already, and we have a couple hours to go. Average volume is it was about 2 million before all this started. So now it's reached back up to 2.9 million. And yesterday was also like 10 million shares or something volume. Let's see. I'm curious now what the volume was yesterday. Let's see for a second. I mean, 10 million times $200 per share. You're looking at, $2 billion volume, right? What was T Row's position size? Do you remember?
I think they were like at 5% total or something, if I
Oh,
can recall that.
wow. So they're gonna have to get out of this over a few days. They can't do it in one day. There's no way. And that's just Hero.
That's what I'm saying. This volume is
Oh
not.
shit.
It's not much volume at all. When you start seeing, and Tiro is just one of them, and you've got 93% of this being held by the funds, you
Yeah.
know, and these people are not trading yet. Okay, there's still holiday week for them. They haven't come back yet.
Right,
So
exactly. Wow. Let's see. Yesterday's volume was, yeah, 10 million. 9.4 million. That's crazy. Yeah, that's crazy. This is really wild. I mean, this stock can drop really fast, but I'm down shorting it. I think at this point it's pretty nice size, and I'll short more if it bounces somewhere along the way.
I I stand corrected. So Tiro price is actually almost 11%, and
Really?
Fidelity next is almost 10%.
Oh my God.
Vanguard at 9%. So there's it's got a very tight holding, and once it unravels, you're going to see some big price drops.
I mean, these are institutions that can hold on to their positions, though, you know. But if you have a multi-billion-dollar position and there's a massive kind of damning short seller research report and you haven't sold it all the way down, then you kind of lose your job that way. And that's the way kind of it's a career-ending move, I think. But we also like we don't really. I mean, what's the as of date of those percentage positions?
It's as of the end of third quarter.
Yeah. September. So they
September end.
postponed.
But I doubt any of these people were selling. Just overall, you did not see because Carvana was still kind of going up towards the end of the year.
Yeah.
And these guys are not going to sell when the stock is going up. They never do.
Yeah.
Plus, you have year-end capital gains already in a frothy market. They're not going to lock in a lot of gains and rather postpone it for next year. So,
yeah, we'll see. We'll see. I mean, the December 31 numbers are going to come out. Going to come out in like 6 weeks or so. All right. Any other questions, comments? I started early today, 12:30 Eastern, and it's been going on for an hour. I don't really have anything else much to say here. Nvidia, Jensen's speech is on Monday. I don't. I haven't really changed my thesis around Nvidia, um, despite the last couple of days of price surge. It's trading near all-time highs at $3.5 trillion company. Tesla, this kind of bounce back is normal. I don't really think much of it, honestly, but um, I think this stock will continue to downward. I'm holding on to a short position. I'm not adding much more here unless it goes to all-time highs again. At that point, I might add more, but I don't really. I'm not. I added a bunch yesterday, so it's probably a good size position at this point. And Rivian, see where that stands today. At $16 for 26 cents, 23% up. This is a short squeeze. If you look at the Yahoo Finance, let me pull up the volume for Rivian. $89 million shares traded today. Average volume of about $35 million shares per day. So it's already almost triple the volume. So clear indication of a short squeeze going on right now. This stock can have as high as, I think, when Volkswagen announced a stake in the company, they had 262 million shares traded, and we still have a couple of hours to go. So they're going to trade, more than 100 million shares today, well above 100 million shares, and then we'll see how that goes after that. There's going to be some excitement, probably some expectations around gross margin positive when they announce earnings, probably in February, I'm guessing. But I think the company faces some significant fundamental challenges that is just I don't really see the resolution from the management team to overcome those challenges. And the macroeconomic environment is worsening. ACDC, let's talk a little bit margins for Tesla in Q4 and deliveries in Q1 for Tesla. Do you have any kind of expectations for Q4 margins and Q1 deliveries for Tesla?
I don't have specific numbers on that, but I do believe that the first quarter margins are going to come in lower than the fourth quarter, and the delivery numbers. In fact, I was just going to ask you that exact same question. If I'm estimating 375, and I think I'm being a little bullish on that itself. Their inventories are completely out, and we're almost going into a week of no inventories. So I don't understand when these cars are going to show up in inventory, or when the Juniper is going to show up, and when that ramp up is coming.
Yeah. Yeah, I share those views as well. I mean, I think probably I expect deliveries in the low 400,000 range for Q1. You said 375, right? I don't think it's going to be, I mean, that would be a shocker, I think. But um, the fact is, interest rates are still high in Q1. Q1 is seasonally, lots of seasonal headwinds in Q1 versus Q4 is, pretty balanced. But the fact is, I think deliveries sharply dropped, or orders sharply. My guess, this is pure speculation, but I think orders sharply dropped in the second half of December, and um, we'll see. If that's the part of the core Q4 quarter that continues throughout Q1, which could happen, um, then we could see a quarter-over-quarter massive drop in deliveries. And further, Tesla is going to take some time to ramp the new car production. That's not going to happen fast. So that's going to be that's going to be a headwind for production deliveries throughout 2025.
When you say new car, are you talking about a
Juniper.
new model or the Juniper, right?
Yeah, I mean, look at how the Model 3 production went in US. Like China did fine, as they always do, but the US production ramp was horrendous, really bad for Junior Model 3. You know?
And the Model 3 pricing was a little on the firm side, so they did try to firm up its price, but I don't think it really sold nearly as well as the Y still.
No, yeah, exactly. I mean, the new Model 3, they added a lot of value to it. They added, by my estimate, about $10,000 of value, and still the deliveries underwhelmed. And the early indication of that was the chief design, our design officer and production lead going on X live stream trying to sell the car, and I was like, "Oh man, this car apparently, I guess, is not selling like hotcakes as I thought it would." But
How do
so
you come up with the $10,000 on value
I
added
have
to it?
I have tweets on that. Basically, like whatever features they added, I kind of independently estimated their values and added it up. So rough ballpark $10,000 of value added to the car. They have the second screen, the acoustic glass, new suspensions. I mean, the car is excellent, but yeah, it's a little sad that it didn't do well, honestly. Um, so in China, they're struggling because of competition. Competition is rising really fast, and China already has its own companies and autonomous driving testing, like their own Waymo versions across the country. So we'll see how that all pans out. But
And the economy in China is not looking good.
even then, though, car sales are doing well in China. Like the Chinese automakers are growing even fast. I think Tesla sales grew about 8% in China year over year for the quarter. But Chinese automakers are growing even faster. They're growing double digits, especially the ones that offer hybrid. So Chinese automakers are taking share away from Tesla for sure. And we'll see how that continues. All right. Anything else? So you said 375. I'm at 420,000 deliveries for Q1. And I think so. Tesla fan or James Cat already said he expects significant lower margins for Q4. I agree with him after further analysis. I thought maybe it would be flat quarter to quarter, but he's probably correct on. So I guess we'll see how that pans out. And is it true that Lightning Oats outsold the Cybertruck in Q4? Did you know that?
No, I did not.
F-150 Lightning, I think, has a lower ASP though. So um, let's see. F-150 Lightning ASP in Q4 2024. The Cybertruck was at like $100,000, and F-150 Lightning did outsell the Cybertruck, but I'm guessing it's probably at a much lower ASP.
Do you think it was really to Tesla's advantage to open up the supercharging network to everybody else?
Yeah, I mean, I think they had to do that for monopoly considerations. All right, I'm out of time. I gotta get going. Sorry for the early cutoff today. We started early for those of you who just joined, and we'll continue Monday. Take care, everybody. Thanks, ACDC.